Happy Sunday, Tampa Bay. We are with you for another week here on the Duncan Duo Show to talk about the Tampa Bay real estate market. I am Andrew Duncan, joined by Mike Yates with Atlantic Bay Mortgage. We had Robert Johnson, Terrence Silkworth, and Louis Savanetti, a couple of our top agents on the show, hosting last week in our absence. And I just got back from a really cool real estate conference, talking more about, kind of the evolving changes that we have going on in the industry, the tech that's coming in, the disruptors, and pretty exciting stuff happening in real estate. Not exciting for a lot of real estate agents because it's probably going to put a lot of them out of business with some of the stuff that's going to happen. I think some of these large home buying companies are here to stay, and realistically, it's going to be hard for some agents to compete. Fortunately, we do a massive amount of advertising to be able to kind of withstand that, but nonetheless, a lot of changes coming in real estate, and changes this week on the mortgage front, Mike, in that mortgage rates have more or less hit a record low again. They've bounced back down, and it's prompted a lot of buyers and sellers to get off the fence. Yeah,
it's kind of funny because I always say, now's the time, rates aren't going to get any better.
But then they get better.
And then they do. So, I've even seen a couple things and like a couple loans down in the threes again.
Yep.
High threes, but it's a range that I honestly thought that we would never see again, or if we did, it would be, 5, 6, 7 years down the road. It's great for our market. We talk about it all the time. I love it because this is what I do for a living. I don't like it because I'm trying to save money as well.
Yeah, exactly. I'll tell you, the interesting thing, though, is there's certainly some opportunities for refinances for people. So people that may have bought 6 months or a year ago, rates are down a point plus from where they were. It could make sense for them.
Right. One program that always comes to mind for me is the VA Streamline. It's probably the easiest refinance out there. Basically, you really don't have to do anything on the refinance.
And it's lowering the rate.
Yeah, exactly. So, if you bought a house maybe 6 months to a year ago, and we're in that time frame where it was
and you're a VA loan,
high fours, low fives, now might be the good time to look into it and look into the Streamline. It's a really easy process. There's no appraisal requirement. Essentially, you just roll all your closing costs in. There's no income requirements other than showing that you are still working. We do have to have qualifying credit scores for the program, but that's more or less just to be able to get an interest rate for you. But other than that, it's a really, really easy loan. One thing that I will say is the VA has made some changes where you have to make 6 payments before you can look at that program.
Okay, so you've had to have been in the house for a while. One other thing on the refinance front is, again, you always want to evaluate it with your rate change to determine, okay, there's going to be some costs associated with refinancing, and how long do you plan to be in the house, and will that get that money back quick enough? Your lower payment, will you get that money back quick enough to be able to have it make sense?
Right, yeah, I think a lot of people don't realize that there are closing costs associated with refinancing a home as well, and they're really not much different than they are when you're buying a house as well. The main difference is as long as you have the equity there, you can finance the closing costs, which is different from the purchase where you have to pay those out of pocket. But that's a big thing to look at. A lot of people ask, well, is there a general rule of thumb? Is it a 1-point interest rate deduction? But every circumstance is different for everybody. Yeah,
it's the one thing, I get this question, I still get it from real estate agents that you'd think would know better, but the reality is every house, every situation, every person is going to be different. Any calculator that you use is likely, it's not going to be exact with what your payment ends up being. Taxes, insurance, your credit score, the rates on that day, they change every single day. They could go up a quarter point tomorrow. And that's why I feel like, there was a lot of news out about, the best time of year to buy and sell, and a lot of people were more or less saying, oh, it's right now, the best week of the year, and all those types of things. In addition to all of that, from a seasonality standpoint, normally every year, you also now have interest rates being at their lowest point. So if there were buyers out there saying, "Oh, I'm waiting," or sellers that were saying, "I'm going to wait to put my house on the market to either maximize its value or to give me the best shot of finding a good deal on a house," interest rate controls it more than price does.
Right.
You know, the long you're waiting any longer, and again, you're rolling the dice. You know, but I think all things point to a healthy spring and summer real estate market with the changes in interest rates because of all of those factors.
Right. One thing that I saw, and it'll be interesting to see if this happens, especially depending on how long the rates kind of stay where they are right now. You know, with maybe potentially, and the hopes are a lot more buyers jump into the market. Is that going to shift again to where we're back to a heavy seller's market?
Yeah, who knows?
You know, and it may cause prices to go up
again. It could. Yeah, it very well could. And I, you know, I had been a believer that, you know, we might be seeing signs of a shift, you know, probably 4 or 5 months ago. And we had a couple months in a row where prices were flat and sales dropped year over year, and then it recovered in February. So it'll be interesting to see what March statistics say in terms of, you know, is it back towards prices and home sales rising again, or are we kind of flatlining? And I think most economists predict that this real estate year will see appreciation. We'll see sales be kind of flat, but the appreciation percentage will be much lower than we've seen the last few years. But again, if interest rates stay where they are right now, they might be wrong.